Yep. Okay, cool. It's recording. All right, awesome. So, again, so yeah, this call. Okay, cool, awesome. So, yeah, so before I get started, I just want to explain a little bit who Jesse Livermore is, but not too much because obviously this is not the main purpose of this Zoom call is not him as the person, but it's him as the him and his methods used in the market. Okay, unfortunately, him as a person, he can't help us anymore because he's no more. He's dead. But his method still lives. Okay, his methods, his techniques, his mindset still lives, and that's the main part that I want to get into today. Now, I did have to cut it short. Why? Is because there was a lot of information, and I'm having to do it in two parts. So this is gonna be part one. We are then gonna follow it up with next week with part two. The reason why I've done it like that is because I want to give you guys those information, but not only give you guys those information, make it bite sized so you can actually take it and then apply it. Because we all know that yeah, information is good, but only applied information is power. Okay, so I want to give you guys again some sort of nuggets that you can actually take away straight away from today and then change your trading game. All right, so first things first, obviously, just a little more. He is not a forex trader, guys. Okay, he is not a forex trader. He's actually a stock trader. All right, and this was actually quite appealing to me. Why? Is because stock traders they are known as the investors. Okay, if you was to bring up the word investor, forex trader does not come into it. It might come into it now, but not before, not in the 1900s where obviously Jesse Livermore was alive. So the way that they do it, the way that they make their income is very different to us. Okay, we know that, we obviously know that because we do it differently. But basically, what I'm trying to say is the mindset that he has is that he has the mindset of an investor. Now, guys, having that mindset of an investor, apply that to the power of forex. Trust me, you're gonna be killing it. Okay, and this is what we're gonna be diving into. Number one. Number two, how did that come about? Obviously, looking for Jesse Livermore. So, all of you guys, right now, we've got access to IAM. I actually believe, this software, this platform, this vehicle that we have is by far the most powerful thing that I have ever seen. Why? Is because it basically bridges every single gap, everything that you need. So we all know all these educators on Go Live. So basically, I was trying to I said to myself, right, and enough is enough. I want to know what these guys know. Okay, so when these guys were once in my position, what was some of the things that they were doing that got them to the position that they are now? If you guys didn't get that, right, so this is what I was asking the questions of: what were the educators on the platform doing, the position that they were in, that the position that they were in then, to get to the position that they are in now? Why? Is because the position that they are in now, that's the position I want. So if I want that position, I must be doing the same stuff that they done to get there. Because again, I'm a firm believer of, if it can be done for one, it can be done for hundreds and thousands and millions. All right. And again, so I approached my educator, Zachary Hogan and Jordan Morgan, and they basically both recommended to start off with Jesse Livermore. So since then, I just been applying. I just been learning. Okay, first off, I've been learning about him. I've been learning about the way that he thinks, the way that he approaches the market, and then secondly, I've been approaching the market with that kind of mindset. Okay, so as I said again, he's a stock trader. Although I haven't got into stock trading yet, I have applied some of his techniques into trading, and this is what this call is into forex trading, and this is what this call is all about, because I've broken it down to you guys further. So again, as I said, that's a little bit about just Livermore, not the main topic of discussion for today. Although big respects, big massive respect to him, but I really want to get into his methods. All right, so uh, let's see if you're gonna work. No, okay, no worries. Oh, that was a little something. Okay, cool. It's time to move on. Okay, cool. So lesson one that I wanted to approach again. So the lessons, they're not really arranged in any way, but long script. the lessons are not really arranged in any way. It's just that as I was reading the book, so as I was reading the book, I then just started picking the first thing that came into my head and then started kind of annotating it. Guys, this is really doing my head in. I don't know why it's not. All right, okay, cool, awesome. So this is working. Okay, so Jesse's lessons one. So again, this is an extract from the book. What is this now? Forget that. Okay, this is an extract from the book, and the main part that I want to be talking about is the one is the highlighted one. So one of the greatest mistake inexperienced investors make is in buying cheap securities just because they are selling at a low price. Okay, again, we don't deal with securities, we don't deal with stocks and shares and stuff or anything, but guys, having that same mindset into forex is basically saying that, you know what, one of the greatest mistakes in Jesus. One of the greatest mistakes inexperienced traders, investors make is thinking that just because price is at its, I don't know, all time low or a new low or basically made a lower low, that, you know what, this is the lowest that it's going to get to, we can now start buying. So what you're pretty much doing is, as what this obviously incorrectly says, is you're guessing that it must go down or it must go up now. Why? Is because it just, price has never been there. Okay, price has never been there, and price has never been there, so therefore it must change. Whereas that's not the case. So by us just having that kind of mindset removed, we can obviously change our trading game. The second lesson that I wanted to get into is this. So to look forward and see what changes are likely to occur 6 months to a year from now on. Hence, um, so unless an investor or unless a trader does this, he will soon find himself in a painful position of being hung up with a lot of trades or a lot of stocks that have gone over the top and turned downwards. He will find his funds, his margins, his equity tied up so that he can't use them. Okay, investors should ensure themselves against such a situation by not plunging into in the cheap stocks, but by keeping the principal portion of their funds liquid, so that when a good investment issue comes along, they will be in a position to take advantage of it. Guys, this is simply saying, do not go out and open every single trade setups that you get from, let's just say, Swipecoin, Tribe Trades, Gold Carb, some of your own analysis. Okay, don't be opening all of them. Pick and choose. Okay, pick and choose one of the best ones. Why? Is because you want to be having most of your deposit, most of your balance as liquid, so that the next trade setup comes, you can then go ahead and put in that open up that trade, and then that could have been your that could have been like a better trade basically. Okay, so that's what that is basically saying. And again, touching back on against the situation by not plunging in the cheap stocks, that's basically saying, so when it's cheap stocks for them, a lot of the stockbrokers or stock traders, when it's cheap, they tend to buy a lot of them. So for us, it will be okay, cool, just open up a lot of new trades, and then just using up the our equity. And again, guys, so the way that we trade is different. We do margin trading. So some of the consequences of you having a lot of open trades is basically you might be having negative equity, where you have like zero free margin, so you can't open up new trades. As I mentioned, negative equity, where your broker might be giving you margin calls, or they might just close the trades themselves. Okay, or you can be at the worst end of the spectrum, where you actually owe the broker money. Okay, all of this has happened before, where people owe broker money in hundreds, thousands, probably millions as well. Right. And what I have is, I've got an example to show you guys this as well. So for example, touching back on one of the things that he said, right, was to look forward and see what changes are likely to occur 6 months to a year from now on. Right. And again, I've got an example to show you guys is this. So this is on UCAD. All right, this is on UCAD. So this was back in December last year. So just going into 2020, 18th, 19th of December, I was looking at this. Okay, I wanted this to come down. So according to my analysis, according to my work, or according to my strategy, I wanted this to come down. Once this came down, so again, look very closely to the 1.0300 price level. I wanted that to then go up to the 1.335 level. All right. So price came back down. Okay, price came down to the 1.300 level, activated the trade, then we went up to that 1.335 100 level, as well as trading upwards. Currently price is trading around there. Okay, now this was a stop loss of 60 pips, a gain of 350 pips. Okay, now 60 pips again, just because. So going back to what he said on his second lesson was, you may have a lot of trades open, and because we're margin trading, our balance, our like total balance may be minus. Okay, and whilst you're over here, let's just say you was down like 50 pips in drawdown before the move actually happened. This minus 50 pips, because you had other losing trades, okay, or not so much losing trades, but let's just say you had 10 trades in drawdown, all of them were in drawdown. Your broker can just close the trades, okay, before the profit happened, all right, before you started going into profit. So this could have taken you out before you actually went into it. So this is what he means by picking and choosing the right one. All right. This is what he means by picking and choosing the right one. Can you guys just put a 111? See some people messaging me saying that they can't see my screen or hear me. Can you guys put a 111 if you can hear and see my screen, please? Okay, perfect, perfect. All right, awesome. Thank you, guys. Cool. So then we move on to his lesson 3. We move on to his lesson 3. So his lesson 3 is basically, um, there's only one way that you can succeed in the market. The only one way that he knows is for anyone to succeed in his trades, investments, is for him to investigate before he invests. All right, that's a nugget right there, guys. Investigate before you invest. Investigate before you open that trade setup, that trade idea. Investigate before you come out. Investigate before you break even. Investigate before you put stop before you move your stop loss into break even, or you move your stop loss into stop profit. Investigate before you invest. Okay, so basically to look before he leaps, to stick to the fundamentals and disregard everything else. So by that I mean, look, take you out of the market. Yeah, you know, when you're just simply crossing the road, you are looking both ways before you put that foot on the road, right? This is the same thing, guys. Before you open up that MT4 trade, look, so basically investigate is you looking both ways before you cross that road. Investigate before you cross that road, okay, or you put foot on that road. Another way is basically you must know your market, okay. Jesse Livermore is someone that knows his market inside out. All right. And again, he talks about it here. So no man can succeed in the market unless he acquires a fundamental knowledge of economics and and thoroughly familiarizes himself with conditions of every sort. The financial position of a company. So for us, it won't be a financial position of a company, but it will be where price is at for that trade. Okay, for that currency pair, where price is at, where price has been, and where price is looking to go. Okay, that's what he means for the financial position of that company. But for us, that's what it means. That's what it means for our currency pair. As I said, it's past history, production, as well as the state of that industry. So for us, it will be the state of that currency pair. Okay, maybe there's like a news coming out for, let's just say, euro. So it'd be the state of that industry for the state of euro. What is happening generally for euros? What is happening overall for GBPs? What is happening overall for USDs? Basically, so that's what he means by the industry. Um, Got a question. Okay, cool. As well as doing, and then yeah, so that's so that's what he means in terms of that. Moving on to lesson four. So lesson four is basically more essential to success. Okay, so essential to stock market success on knowledge and patience. Right, so few people succeed in the market because they have no patience. They want to get rich quickly. All right, guys, can I get a 111 or a 222? Let's go for a 111 if you wanted to get rich quick. All right, matter of fact, I will start this because everyone wants to get rich quick. All right, everyone wants to get rich quick. Okay, again, 111. But but we must stay humble, man. We must stay humble to it. Okay, you know, so they're not willing to buy when the thing goes down and wait. Okay, by that I mean they're not willing to study the market. They're not willing to get the lowest low. Basically, they're just kind of trying to come in. So they buy mostly when that thing is going up and near the top. Why? Is because they just want that they just want that 5 pip 10 pip move and then come in with like a 10 standards, all right, 20 standards. That's what he means by getting rich quick. In the long run, patient counts more than any other element except knowledge. Guys, if you're taking note, take this. In the long run, patient counts more than any other element except knowledge. Okay, now this to me screams something, man. Patient is obviously something that we have to work on, not the market, not your broker, not your educator, no one else. It's you, and it's you against you on that one. But when it comes to knowledge, this is why again in I am we used to have this motto where we all where I'm always a student. All right, I stay a student to the market. All right, it could be learning a loss, or it could be learning a win, or it could be learning a break even. Whatever it is, I'm still learning, and I would always stay learning. Okay, that's the mindset that you gotta have. You don't want to come into this, all right, if you've been on a winning strike, and then you've been like, yeah, you know what, 10 TPs just got hit, 2 TPs, 3 TPs, or 2 days, 3 days of winning, and then you're like, yeah, you know what, I know more than the market. All right, you don't want to be having that sort of ego. You want to stay humble to it. Yeah, the two really go hand in hand. Those who want to succeed through their investment should learn that simple truth. All right, there you go. Sometimes you win, sometimes you. Yep, there you go, Will. Yep, sometimes you win, sometimes you learn. No losses. Also this investigate. Simple truth. Also this investigate before you buy. So we touched on that before, and then you're sure that your position is a sound one. Don't let yourself become discouraged by the fact that your securities are moving slow. All right, guys. So this is the third patience over here. Patience to hold. Do not think that when thinking always be learner. Yep. So do not be thinking that you know what, my trades are running too slow. Okay, my trades are running too slow. Let me cut out. All right, my trades are you know they're not really giving me that real quick get rich feeling. Do you get what I'm saying? You know, I haven't gone from £200 deposit in day one to like day five 900 quid in my account now. It hasn't given me that. Let me duck. Let me come off. Okay, but you must believe in your trade setup. Good securities in time appreciate sufficiently to make it well worthwhile to have patience. So a good trade setup in time will definitely appreciate. Okay, especially in the bull market like the present. So again, that one is is really specific to the stocks and the indices and stuff. But again, when it comes to the trade, margin trading, currency trading, it applies to some extent. Okay. Lastly, think in terms of industrial outlook. Choose the strongest company in the strongest industry and do not buy stocks on hope alone. The only time to buy is when you know they will go up. Okay, guys, ask yourself this question. Okay, I'm not going to ask you this question, but ask yourself this question of how many currency pairs are you looking at? Okay, the last bit said choose the strongest company in the strongest industry. All right, when it comes to the euro industry, what is the strongest euro? Okay, when it comes to the GBP industry, what is the strongest GBP? When it comes to the USD industry, what is the strongest USD? Okay, I myself, I went from watching 50 currency in my arsenal to now only watching about 4 and 11. Only watching, right? But in terms of trading, I'm only trading about two to three. That's it. Why? Is because I wanna I want to know what is happening. Number one, I wanna know it like the back of my hand. Okay, so this is words from Jeffrey. I'm not sure if he's on the call, but shout out to Jeffrey. He basically said, you know what, you need to know the market so much that if you are away from the charts 2 to 3 days, you come back, you're like, all right, cool. You're still up on top of it. Okay, you're still on top of it. That's how much you need to know your market. That's how much you need to know your company. Okay. And then again, do not buy do not buy stocks on hope alone. A lot of us are, open up trades on MT4 thinking, I'm gonna pray on this. I'm gonna hope it goes up. I'm gonna hope it goes down. No, no, no. We don't do hopes. All right. Again, the only time you should buy is when you know it will go up. The only time you sell is when you know it will go down. Is when you know it will go down. Okay. Again, I've got an example to show you on this one, like this, right? So Euro GBP. So touching back on what he said, choose the strongest company, right? For me, when it comes to the euro, I love to look at Euro GBP. Okay, that's my favorite pair. Why? Is because I get paid in full with my broker. I get paid in full with Euro GBP. So with Euro GBP, it's actually 10p per pip. Okay, so for every pip, I'm getting 10p for that. All right, if I'm using 0.01, if I'm using 0.10, I'm getting a pound. If I'm using a standard, you best believe I'm getting my £10 per pip. Okay, now again, when you might not be using standards right now, okay, you might not be using standards right now, but you got to believe in yourself that you will. Why are we focusing so much of our time on this low valued currency where you're getting 4p per pip, 3p per pip, 2p per pip sometimes? All right, that's only £2. That's only £20 when you can be getting £10 for the same trade setup. Okay, what you're doing in the low value currency, you'll be doing the same in the high value currency. Facts. All right. So I don't know that currency, bro. It does change according to your broker. So I don't know what broker you're with. Again, they are the one that set the pip value. Go to your broker. They should have like a pip calculator. Find out over there according to your different lot size, and then your next step is to create a list. So number one, if you guys want to know how to minimize your currency trade setups, go to your broker's pip value calculator and find out every single one of them. What is the pip value? Okay, is it 8p per pip? Is it 9p? Is it 10p? Is it 7p, 6p, whatnot? And then from that, break it down even further. So which one do you like? Okay, maybe the time factor might come into it. So for something like, maybe I don't look at GBP AUD probably because I'm not up at 2 o'clock, 3 o'clock in the morning when it moves the most. Okay, but I love GBP USD. Why? Because I'm up for the New York overlap of London and New York. So therefore, I'm going to look at that. Okay. I tend to look at GJ. It moves good. And again, with Euro GBP, those are like some of the currency pairs. But you got to find out for yourself what is it that you like. Okay. But going back to the lesson, so for me, I found out Euro GBP is the one that pays me in full. So therefore, I've devoted my time to, number one, studying it. Number two, looking for the entries. Number three, obviously holding for that trade. So this was the trade setups that I was looking at back in, again, December 2019. It was coming up to the end of, actually on the last day. I must have been nuts looking at the charts on the last day of the year. So this was December 31st, 2019. Looking at the charts, looking at, okay, cool. What's price doing? This was a trade setup that I had for, I think it was for months. So I was looking at that. Now, again, if you guys can see where the arrow down has changed to the arrow up, this was my entry for it to go up. Okay. Again, don't focus in too much about the penguin, the IP and stuff. That's my strategy basically. But just follow time and price. Okay. So moving on to this. So we did not actually. So if I show you guys over here, so I was looking at either the 0.84 180, or at least the 0.83762, or even at that 0.833 level. Okay, which I did enter because I saw that the market was coming down. Okay, I entered, I got stopped out. Okay, I entered around here. So this was that move, that 0.8300, which I entered. I thought, to me, you know what, it was a good time. So look, if you look at it, it was like 12 o'clock, really, really nice. This one, so it's gone from December to February now, guys. Okay, pay attention. The trade setup that I had in December did not activate till February. Are you guys willing to hold 2 months for an entry? Right? That's just me saying in it. That's just me. You got to find out. Okay. A lot of us. All right. This is what a lot of us do. A lot of us spend 1 hour, 2 hour, number one, studying the market, number two, analyzing the market, meaning having trade set up ready. And just because you didn't get it the first time, the second time, you delete everything and then you move on to the next market. And then guess what? You do the same thing again. And then guess what? You do the same thing again. Okay. But by you having that decision of, you know what, I'm only gonna stick to one or two pairs, guys. If you know Starboy, swing trader, Justin Saini, he only focuses on GJ. Okay. If you don't believe me, go on his Instagram. I had the privilege of speaking to him at a convention, 28th and 29th. He said, you know what, GJ made him the most money in his 20s. Okay, I believe he's 22, 23, something like that. But GJ made him the most money in his 20s, because Christopher Terry taught him how to swing trade, and he just picked one or two pair, swing traded that, caught thousands of pips. Okay, and he picked GJ, caught thousands of pips. That basically busted him out. Okay, and this is the same thing. So a lot of us are just moving a lot, going from one currency pair to another, to another, simply because it's not giving us what we want. Okay, we have to be patient with it. So, all right, we waited 2 months, still didn't get a clear entry. Clear entry. We got in, we got stopped out by this wick over here. It's cool. Now what we're doing, we're currently studying the market for some more price action, because we need price action around here. So we study it. Okay, perfect. So we've got this move from A to B to C to now D over here, and then we're seeing market rapidly coming down. Okay, so what I wanted to do, I wanted to obviously focus on that spring again. You can enter off that spring, but I was looking. That's why I've got my sniper entry over here around the test. And again, guys, I was looking at that this 0.8 0.8300 level. um we then finally got that spring. Okay, boom, finally got that spring. As well as that, guys, for me, one thing is really important is time and price. Look at where the price. Okay, this is at 12:45, and 12:45, and price has just come to my entry that I wanted, the 0.8300. So again, you could have entered, but I didn't. I stayed true to my game plan. I'm looking at that test. So what I wanted was price to go up. I'm going to enter off that test. So what did we get? I don't know if I can zoom in, but it's going to let me. Oh, there we go. Perfect. So we've got that spring that you guys looked at, and then this over here. So this little wick is the one that activated my trade idea. All right. And then, so by you just simply holding onto it, we was up 400 pips for that one. Okay, we was up 400 pips on that one. Again, guys, you gotta stay true to your trade setup. So if you was to look at the price, 0.87200, originally I wanted it to go up to 0.8800. Okay, so again, price is currently fluctuating down a little bit, but we're still I'm still holding on for that TP for then the next big sell down. Okay, so that was just to show you guys these three things that you need to have patience. So number one, do you have the patience to study the market? Okay, number two, do you have the patience to enter? So I perfectly showed you guys that we originally looked at the trade setup December 31st. Price did not come there until February 18th. So do you have the patience to wait to enter? Thirdly, as soon as you've entered, you have then the patience to hold on to your trade so TP so your TP can get hit. Okay. Again, so that was to that the what is hope in the market was the one referring back to this last bit over here, because there's truly no hope in the market. Okay, the market moves wherever the market wants to move. No one here can control the price. We do have the market makers, but they can only control the price to some extent as well. They can't control it fully. Okay, um, there's so many participants into the market that no one has control over it. Okay, so lastly, And again, this is a perfect trade setup on the monthly as well. Okay, so you know, a lot of us wants to come in, or a lot of us wants to come in and catch what, these thousands of pips, these 2-3 thousands of pips. And you know, they think they can, they think, you know, they would have to open up like 100 trade setups for them to do that. You know, they need to be trading every single day. They need to be, you know, on the charts every single time, every single New York Open, every single London Open. Guys, you truly don't need to be like that. Okay, so again, so this is my strategy. Just was just me back testing, meaning me, I would just study more about the market. But this candle took out liquidity over here, so this was a nice price of interest, point of interest to look at. It mitigated to break even, which is also our entry. All right, this is where that sniping is over here. This would have been the entry, and my target would have been above here. I'm not above, just below here. Okay, this again is on a monthly. So month one we activate. 1, 2, 3, 4. Guys, can you hold for 4 months with 1,070 pips? Okay, again, it's a question that you got to ask yourself. So if you want to come in and then make these thousands of pips gain, you can do it in one single trade, as I have just shown you here. But do you have the patience within yourself to hold on to that? Okay, do you have the patience to maybe wait 1, 2, 3, 4, 5, 6 months? All right, so perfect. This is a 10 10 month game plan over here. Can you wait 6 months, okay, for the next 4 months for you to be coming out with TPs of 10 thousands of pips? All right, let's just say you paid 70 pips for spread, swaps, and commission fees. You walk away with 1,000 pips in the space of 4 months. Right? I'm not sure your account size, I'm not sure your lot sizes, but you know, I would rather have my phone making me money or catching me thousands of pips in the space of 4 months rather than me just, you know, every single day looking at the trade setups. Now, what does this mean? So a lot of people think, yeah, you know what, I need to be in front of this computer for me to make money, whereas I have just shown you it doesn't need to be like that. Okay, again, a lot of people may have quit their job, their office job, only to find themselves in front of a screen 10 hours a day again. Okay, have you really quit a 9 to 5 for you to put in another 9 to 5? I don't want to do that. Okay, I actually want to use the power of Wi-Fi money, the power of Forex, to live my life. Okay, not to you know be spending a lot of the time in the charts. Okay, so one of the rules that I hold to myself is I can give hours and hours to studying the market, but I don't want to give hours and hours to the market. What I mean by that is I don't want to be in the trade. Just want to come in, come out. Okay, I don't want to be in it, because the more that you're in it, the more that your balance, your deposit is vulnerable. Okay, that's where it's at risk. But when you're not in, you're not at risk, right? So that's that over there. Just to show you guys, if you guys got the patience, you can go ahead and ask yourself for that. Lesson 5. All right, this is one that really touched home with me. So he began at an early age, 14, and up to 1922, he had been trading in stocks for about 30 years. All right, so guys, 30 years in the game. Of this period, so of these 30 years, 25 years were devoted to finding himself. And I'm just going to pause there. All right, and I'm going to say it again. 30 years in the game, but for 25 years, that 25 years were devoted to, number one, finding himself. Okay, that to me is very, 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 very powerful, because it goes back to what I was saying about a lot of people want to come in and make money quick. Okay, make money quick, but it might not be the case. Why? Is because number one, you've got to study yourself. You are the reflection of what is happening in the charts. Okay, if you don't believe me, one day when you're emotional, go and trade, and then come tell me what has happened. Okay, emotional in both aspects. Number one, where you're energetic, you're hyped up, you just heard some good news. Number two, where you're maybe your girlfriend just broke up with you, or maybe you just heard the bad news, or maybe you're not feeling well, or maybe you're not 100% within yourself. Okay, try trade within those two differences, and then you would find out for yourself what are some of the outcome. Okay, logically you can tell that the good energy one is going to be good, the bad energy one is obviously going to be bad results. but go out and find out yourself, man. The more that you find out yourself in this game, the more that you find out about yourself in this industry, the more you get paid, and that is facts. Okay, the more you find out more about yourself, how you are, how you think, how you behave, how you feel towards that trade setup, towards that entry, towards that stop loss, towards that risk, towards that reward, the more you would make money in this game. Okay, I promise you. All right, and moving on, his fortunes during that time fluctuated widely from a $5 bill to $1 million. Wow, it's amazing. So he basically went from $5 to $1 million and to $1 million. Okay, guys. Then he went back to nothing. Okay, back to 000. Okay, and then down to $1 million or more in debt. All right. Then back down to $1 million or more in debt, all of which showed his ability to make money in the market at times. His difficulty was in keeping it. Okay, he had no problems of making money in the market. All right, he was he's actually known of the greatest bear of the Wall Street. He shorted 1929. All right, he made his 100 mil and he walked away. All right, which is what we're gonna cover in part 2 of this course. So what's the time? Oh crap, it's 10 o'clock. Yeah, so he that's something that we're gonna cover down later on. But guys, look at his mindset. Look at his mindset. Can you take a $5 bill to a mil and then come back down to zero? All right, come back down to zero, try to go up again, and then you then end up in negative. What is it gonna take for you to get back up? What is it gonna take for you to, lift yourself, pick yourself back up, and then look at the charts again, and then study yourself again, and then study the markets again? What is it gonna take? What is it gonna take? I don't know, because guys, let me tell you something. I don't care who you are. It is within our human nature that within this 2 to 3 years that he did make a killing, all right, he went and he got the yachts. He went and he got the rail cars. All right, he went. This is something that we're actually gonna touch up before we finish. It's actually very funny, guys. He went and he got like this rail cart. All right, back in the days they used to have this rail cart. All right, we're gonna touch on that, but he went and he purchased that. He went and he got the yacht. All right, he went and he got his wife. And again, not trying to be rude to you guys, to you females, but with that comes the shopping, that comes the outgoings, that comes with all of this, that comes the lifestyle. Only for you to find out that what, you've gone back from a million to 000. What is it gonna take for you to pick yourself up again, knowing that what, now what you have, they're no more assets but they're now liabilities? Okay, what is it going to take for you to get back up and then be like, yo, that house is not fully paid for yet? All right, that house, I still got to put down another 2-3 mil on that mortgage. All right, or maybe that car that I bought was just off credit card. What is it going to take for you to pick up yourself and then go back to the charts? All right, guys, let me tell you. All right, this is again quotes from David Eminite. He said that the on the way up is much easier than on the way down. All right, because you'll be happy taking that $5 bill to $1 million. Okay, you'll be happy, you'll be grateful. Why? Because you never had $1 million before. But guys, on your way back down, you've had that 1 million. You've seen that 1 million, and then for you to now seeing it go away, you're gonna feel it. Right? Again, as I said, I don't care who you are, it's within our human nature. Right? We are so we've mentally changed ourselves that we attach our emotion to money, meaning the more money that we have, the more happiness, the more happy that we are. The less money that we have, the less happy we are. I'm not sure why it's that way, but it's within our generation today. Okay, it is truly within our generation today. So that's his mindset, guys. Again, someone who, as I said, today was mainly on his method and mindset, and this right here is the core mindset of what you need for you to become an investor. All right. Yeah. So that's that one. Again, moving on very, very swiftly. Cool. Lesson 6 now. So his desires not only the advantage of plenty of sleep. Okay. He wishes to rise early, thoroughly refreshed for the day's work. He puts in an hour or two before breakfast, studying world's condition affecting the stock market. All right, whether that's banking, whether that's foreign trade, whether that's money, whether that's crops, whether that's corporate reports, whether that's trade statistics. Guys, we have to do the same thing, no cap. All right, we have to wake up. Which is like this, right? The game that we see, the football games that we see these players turning up. Do you not think they practice for that game prior to that game? All right? Do you not think they were warming up on the pitch before the game starts? So before London starts for us, or before New York starts for us, why are we not spending time warming up? All right? Why are we not spending time learning what Price has done, or learning where Price could go, or where Price could not go? Why are we not doing that? Why are we just coming in at London Open, New York Open, thinking, yeah, we're gonna come in, slap 5 standards, and then we're gonna make a killing? All right? Again, I don't understand. Um, but yeah, we basically need to be prepared, just like how he was. All right, just like how he was. So he chooses to trade early for studying these subjects. For at that time, his mind is thoroughly rested and clear of the previous day's impression. So whatever happened previous day, he's no more thinking of that. He's up, he's fresh, new mindset, new thinking, ready to take the day. Okay. He reads the morning newspaper, analyzing and weighting the effects of the news. Most of this has already been developed from words happening on the previous day, and the greater part has already reached him through the news slip, news stickers, and the evening newspapers. But in the morning, fresh angles are presented, and these are carefully gone over. He does not follow the common practice of reading the headlines and wait. He does not. What were we? So he does not follow the common practice of reading the headlines and skimming through the rest of the news. A small item on 3 lines in the corner of the paper may mean more to him than the entire balance of the contents. Right? He once traveled 4,000 miles and took a market position because he had observed a certain brief dividend notice in a newspaper. He has been known to clean house. All right, so basically come out of the trade to the extent of over 100,000 shares on a single news item, and then reverse his position because he found that he misinterpreted it. All right, this is again powerful, guys. All right, some powerful stuff. So we're gonna pick it. In the morning, I'm a morning person. Do you currently have a morning routine? Okay, so I'm just gonna share with you guys what is my morning routine. I call it my 6 figures run. Again, it's just something that I quickly just done up, but I do have like the full scale version, and I'm gonna touch up on it. In the morning, I have my trading affirmation. I have also my chairman affirmations for the other side of the business. I meditate. I do my gratitude. I visualize myself. I'm a Christian, so I read the Bible and I do like a chapter of PD. And I'm not gonna lie to you, I am supposed to do exercise, but the weather's been getting to me. So the exercises part, I've been capping there. All right, but through all of this, I have been keeping up to it. Again, it's something that I've started in January, and again, I'm so grateful and I'm so happy and grateful to say this, that this is something that I've actually stayed committed to. So now, when it comes to my trading affirmations, I am aware of the time, so I'm just gonna quickly skim through this. Um, my trading affirmations basically consists of, these over here. I've got about 40 of them, 34 of them, and I just basically read them out aloud every single day, every single morning when I'm doing my morning routine. So I am a successful, disciplined, and fearless forex trader. I trade for reward to risk, not for money. I never take anything personally. I am paid to wait for great trades. I am a master trader. I recognize loss as part of trading. Emotion has no place whatsoever in my trading plan. All right, that's what I'm repeating to myself. I also have like this timetable kind of thing where these are my Go Life educators, and then if I'm watching them, I'll put them yes. If I'm not watching them, I'll put a no, and this and that. So this is what's up there, but that's not again the main important one. That's just basically something that you can have for you to have your morning routine. Okay, what is that going to do? That's going to put you in the morning mindset. All right, what I call a morning mindset is whatever has happened the previous day, the previous week, whatever, you're now up and running fresh. You just refueled yourself. Okay, and again, whether you went to bed sleeping, maybe feeling a bit funny, now that you have been through your formations, now that you have been through, the chapter of personal development, you have now probably changed your thinking, and then you're going to come in looking at the chart with a brand new perspective, not the one that you were emotionally drained or whatnot. Okay, so that's that one. And then lesson 7. All right, cool. We've literally come up to the halfway mark. I do have 14 lessons designed for this call. Let me know, guys, if you guys want to get off the call. I don't mind. I don't mind staying. Let me know, guys, if you guys want to cap it up in a bit, or if you guys don't mind going over the time. I am aware that obviously we started a bit late. Let me know what guys you would like to finish the call and stuff. But I am gonna move on to the lesson 7. All right, cool. Lesson 7 is basically this: the front page spreads and the big headlines in the newspapers he regards his regards are for public consumption. And this to me was just like music to my ears. Why? Because I also agree with that fact that news is just used as an excuse. Okay, so on the on Metro, I don't know, I don't even Metro, the Sun, the Guardian, all of these newspapers and stuff like that. Guys, I bet you if you were to pull up the last 10 newspapers, and if you were to look at the first page, it's always something that's going to catch you, and it's always something negative. Okay, it's always something negative. So now that I'm thinking, maybe I will have it for next time. But recently we had a couple of things that I saw the impact of it in on the charts, right? So we started off with the Asian lot. So I mean, only recently we've had the virus, but before that we had the fire in Australia. Guys, if you were to go open up AUD USD, go watch that. Right, it dropped. Okay. AUD USD, we had the fire, we had Brexit again. Go watch the news of go watch that. Then we had, so obviously a couple of things going on in America. We saw US 30 tanked prior to that, but now we currently we had the virus, global news, everything. I saw Bitcoin dropping. I saw US 30, DAX. I saw S&P 500 dropped. I saw obviously GU dropped, GJ dropped, everything pretty much, right? Gold on my days, gold dropped as well. Actually, gold dropped when it was in convention Friday. It was crazy. So but yeah, guys, so I'm a firm believer of that. You know what? These headlines in the news, they're basically for the public to scare them and stuff like that. So the vital fact, he says, are usually concealed in all sorts of out of the way places. So he digs for them. He digs for them, right? If they cannot be located in the morning or during the day. So during the day we might get, like, for example, tomorrow at 1:30 we have NFP. Okay, so guys, you gotta think as well, right? So he was obviously born in the 1900s or so, or he was trading in the 1900s. He never had no things like Forex Factory. He never had things like, Trading View and stuff like that. So when I mean he used to dig for them, you best believe he used to dig for them, meaning he would call up that guy, call up this guy, call up for favors, this and that, read that newspaper, read that newspaper, read this newspaper, and then, speak to this guy, speak to that guy, da 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 da. Now we just have it all in a couple of buttons. So what's Forex Factory? Investing.com, MyFX book, they've all got these calendars that you can set alerts and get all of these notifications. So we must obviously pay attention to that. So what he would do then, if he did not get them, he would temporarily discard his early to bed rule and sit up to 1 or 2 in the morning. Okay, he gets what he goes after. And man, I just love this. Why? It's because he made his millions. All right, he done it, he's seen it. He still stays a student to the market. Guys, are we up at 1, 2 o'clock in the morning, studying, back testing, looking at why you were wrong or why you were right? All right, are we up? Are we doing those kind of things? Again, this is not me. I haven't written this book. This is Richard Wyckoff who wrote this book, having studied Jesse Livermore. Okay, and if you guys don't know who Richard Wyckoff is, you best Google him as well. Okay, he's the GOAT. Early to bed and stuff. So in certain papers, he finds digest of the steel, coal, textile. So again, what's it called? So again, he would do like all these other stuff, which we don't need to if you don't want to, because he also does the commodity market. There we go. So anyone who has employed the early hours for such a purpose realizes what an immense advantage is gained in this practice. The house is quiet. So I'm talking about the morning. The house is quiet. Nothing disturbs the flow of thought during a sufficient period for subjects to be taken up. Okay, you can go ahead, investigate, your conclusions will be reached. All right, guys, try to do this in the middle of the day when you're maybe at work. All right, when maybe you're trading at work, and then guess what, you quickly have to enter because this customer just walked in. All right, or you quickly have to enter because this and your boss is calling you. You guys need to be in a clear state of mind. All right. um okay, no other part of the day affords such a splendid opportunity for the quiet absorption of such data. And that is true, man. Nothing beats a morning start of the day. Nothing beats that. It's truly different. It cannot so effectively be sandwiched in between tape readings while prices are running out on the ticker during market hours. So back in the days, guys, if you guys don't know, they used to have something called tape ticker. All right, so they would have this tape ticker, just literally calling out prices every single day, every single second, every single minute, every single hour, every single day, week, month, and whatnot. So that's what they used to read. All right, whereas us, we just got trading view. We can just look at it quickly, look at the last week, last month, and whatnot. Guys, them lot, yeah, they had to get papers and then just read all of that. So, but again, just you could just goes to focus that you've got to basically dig for facts. All right, dig for facts. Moving on to lesson 8. So again, this is very interesting. Livermore does not concern himself with what this or that person may say about the present condition of a certain industry. Basically saying that Livermore does not concern himself with what this opinion or that opinion or that opinion or this person or that person is saying about the present trade setup of this currency pair. Right, a lot of us, we doubt ourselves. We go up to, I don't know, your mentor. You go up to someone else, or you go up to someone else, and then you go up to someone else, tell them this trade, tell them that trade idea. Let's say, letting them know, okay, cool, what do you think? What do you think? And then they say something that would completely change your mind, completely change your bias, only to find out that, you know what, you were right in the first place. But because you never had the balls, right? You never had the balls to stay on top of it. You never find out for yourself. All right. So he does want to see and study the statistics which show what conditions are likely to prevail in that trade several months from now. Okay, so again, stock traders tend to wait longer, but it just basically says the same thing for you. So when the news item were reporting there's still companies as operating at 25 to 30% of capacity, he told Richard Wyckoff that the actual figure was less than 20%. That's because he went and he done the digging and that. All right. This is the kind of information he extracts from various sources early in the morning when other people are asleep. His daily concentration on economics, trade tendencies, etc., forms the background of the opinion formed before the market opens at 10. All right, that's what this is, guys. Studying the market, knowing what is happening, what that currency is doing within that, generally within that the whole of euros, the whole of GBPs basically, and then form your bias or form your opinion based on facts, not just based on what you think, not just based on what price is doing, but based on facts and how the market has moved previously. Okay, so I'm not sure why that's there, but that's lesson 8 that I've got. Lesson 9: get up early in the morning to accomplish this, as there will probably be no time to do it thoroughly during the day. No at night when the mind is fatigued from the day's activity. More particularly does this apply to those who do not make a business of trading in stocks. Most people do their thinking in well-worn grooves. They are creatures of habit. Right? That is us, guys. We are creatures of habit. They get up at 8 because they have to be at the office at 9. How many of us, maybe you're at school, maybe you're at college, maybe you're at uni, maybe you're at work right now. How many of us tend to get up about 1 or 2 hours before work, before uni, before school? All right. How many of us rush through that morning? Maybe we don't catch our breakfast. Maybe we don't, dress properly. Maybe we forget so many things. We forget our keys, our wallets, our Oyster card, our whatever, your phones. All right. Simply because we're that creatures of habit. And why does that happen? Is in the evening, right? We feel the need of recreation, which often means the theater or dancing or bridge party. All right. Again, these were people back in the day. We probably just want to chill, watch movie, binge watching Netflix and episodes of the episodes, series of the series, um, you know, all of that. They consider themselves entitled to such recreation, and if it means being out late or up late, well, they are good sports and can get along with very very little sleep. All right. It is true they can get along, but can they get ahead if they practice it continually? All right. So, are you here for the short term or are you here for the long term? That's all. That's all that's saying. Okay. Have you got the habits in place for you to win short term or for you to win long term? All right. You just gotta find that out. Again, moving on to the 5 remaining lessons. All right, so Livermore is willing to sacrifice many of the so-called divisions, which occupy numbers of people from 10 p.m. to 12 p.m., 1 or 2, in order that he may devote those few hours to sleep and thus have his uninterrupted morning period for study. All right, so late hours and late sleep are two things like the majority like to indulge in. This majority is known as the public. All right, guys, at this point, I would just like to say, study the masses and do the opposite. Right? Study the masses and do the opposite because I mean, it says it here. Right? Millions of whom attempt in a desultory way to master the greatest and most difficult game in the world, meaning forex trading, or stock trading and whatnot. One that requires an almost complete reversal of previous mental and physical habits. Right, guys. So as I said, the more that you study yourself in this game, the more that you're gonna get paid. No one seriously should undertake trading in stocks as a vocation without adopting such methods as will thoroughly equip him for his work. The experiences Livermore indicate that are the two: one, plenty of sleep; two, an ample time for close and uninterrupted study and reflection on the elements and influences which shape the trend of the market. Basically, guys, number one, are you having enough sleep? Number two, so within that, then the if so number one, are you having enough sleep? Number two, um, are you devoting distraction free uninterrupted time towards your study and towards the reflection of what has just happened in the market? Okay, number one, a lot of people, if you don't get the sleep when we come home from work, we just want to maybe go chill because we're our brain is fried. All right, we just went to uni, our brain is fried, we got hit with this lecture or that lecture, and we was up like till 2-3 o'clock in the morning. We only had like 2-3 hours sleep. Now we want to come home, instead of spending time on the charts learning more, but instead of spending time on Go Live learning about the strategy from the educators, we're now having to chill on bed watching Netflix. Why? Is because it's our mind telling us that we need to chill because we've had a long day. All right, so have plenty of sleep, guys. And number two, wherever you are, whether you're in the library, whether you're at home, whether you are wherever you are, just make sure that you are in an environment where you are distraction free, so you're away from Instagram, Twitter, blah 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 blah, and you just focus 100% in the game. All right. But I'm not, yep, perfect. So lesson 11: Livermore is a keen student of human nature in its relation to the stock market, as he himself expressed in the interview. Blah, blah, blah. Essential to stock market success are knowledge and patience. So we touched that before. So few people succeed in the market because they have no patience. Right? They want to get rich quick. They are willing to back. Oh, we saw that before. Boom. Boom. So the market requires study. In an interview, blah, 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 Mr. Livermore said anyone who figures that his success is dependent upon chance may as well stay out of the market. His attitude is wrong at the very start. The great trouble with the average man, so the public or people like us who just trying to come into this and see if we can change our life, so he buys or trades forex, is that he thinks the market is a gambling proposition. Right? Again, a lot of us, we might be in our second year of trading, but we still think that's gambling, right? If you were to ask me this, I won't say this is gambling. Why? Is because gambling is either 50-50. Right? It's either 50-50, meaning you put it down, you don't know if you're gonna win, you don't know if you're gonna lose. You could win, you could lose. All right. But when I place a trade, I know, all right, it might not be 100%, but I know the favor is more than the favor of winning is more than losing. Number one. Number two, I know exactly how much I can lose, how much I can win. All right. If you guys don't know that, you best know. You best go and study how to do that. Right. By studying the pit value, your lot sizes, your spreads, your commissions, all of that can be taken into consideration. Okay. So unless you find that out, and again, because a lot of people want that have that mindset of get rich quick, they don't spend time studying the market. They don't spend time finding out how to calculate the profit, how to calculate the losses. So to them, it is just a gambling. And then what happens is that they basically it will be like gambling for them. Right? So one should realize that at the outset that the work requires the same study. And watch this, same study and preparation as law or medicine. Right? That certain rules apply to it that are to be studied as closely as if that person, so the trader, were to that trader is basically a law student preparing for the bar. All right. If you guys know anyone who's studying law or anyone who's studying medicine, they know you know that they have to be in the game for like 5-6 years just studying before. And this is also funny as well, right? Because they just have to be studying before they make money back, meaning they have to study 5-6 years before they go find a job before they get an income. Right? If people are willing to do that, sacrifice 5 to 6 years just to studying, why can we not do it on the charts? Right? Why can we not put 5 to 6 years studying yourself and studying the charts on here? All right. So blah blah blah. The fact is, for 15 years, I have studied this subject closely. You might say I have given my life to it, concentrating upon it and putting it my very best. All right. So, guys, you just gotta make that decision. Or have you made that committed decision, basically? All right. And moving on. So Livermore has. So he knows that if he mixes during that trip. All right. So this is what I was talking to you guys about, right? So remember when I told you guys when he obviously made his money, he tried to cut every single connection with the public because he knows that if he mixes the trip from home to his offices, the subject is always going to be about stock market, is always going to be about tips, people, companies coming in giving him tips, or buy into my company, or buy this, or buy that company. All right. And it's going to be gossips, right? People with no intelligence in the market. They've never studied the market, but they formed their own opinion because of someone else's hearsay. All right, and then now that information is now going to be coming up to him. So what he's done is he basically capped all of that. All right, he capped all of that. He just wants to study it for himself. So his journey from home to office now is basically in his own little car, reading his newspaper, and no one speaks to him. The moment he leaves his house to the moment comes into his office, until his personal assistant says hi or whatever, he hasn't spoken a word, right? Unless obviously he took a phone call and whatnot. Lastly, touching up a little bit more about that. So what he hates the most is this. So this is the tips that he hates. Back then, it would basically be tips about, oh, buy this company, buy that company. As I said, a person with even small experience in Wall Street knows how frequently one will decide to act upon a situation in a certain way, and how readily one is thrown off the course he has mapped out for himself. By that I mean someone else can tell you their opinion, right? Whatever trade setup that you've just planned can basically be mapped out. Like, you can basically go to the bin, yeah, you basically just throw all of that off. Right? Having carefully studied out the effect of all of these influences, he has long since learned that he gets the best results by excluding any element that is in the least interferes with the formation of his judgment, which is based on the facts, sound reasons, and logical conclusion. Right, guys? Listen, you might be spending time learning the facts, learning the reasons, learning the conclusions and stuff like that, but just one wrong tip from someone else could have either blown your account or half your account and whatnot. Okay, you guys just gotta stay sold to it, right? Again, one of my goals is to create self-sufficient traders, meaning they don't rely on anything. They don't even rely on me. They don't even rely on anything. But for them to open up their trading platform, and then they can go ahead and then make money. All right. Another practice is his own self-development. He has taken a study of psychology. All right. So this for us nowadays is basically personal development. You've got to every day be personally developing. Psychological effect of this on the Wall Street phase. He has taken a course. He became a student of psychology, and yeah, basically he's now gone and get a degree. Basically, guys. So what he hates is a tip. Now, that applied to obviously our day and age is pretty much this. A lot of us, all right. So again, I am has pretty much patented it for us, right? But a lot of us, what we're doing, I'm not gonna say wrong because it is not wrong. But what a lot of us are still doing is that we're still using the shortcuts, and by that I mean they're not plugging in to go live. They're not listening to the educators. What they are simply waiting on are them signals, all right, or them trade ideas coming in on Gold Cup, on swipe trades, harmonic scanner, whatever you use, steady, whatever you use, bounce back, right? Whatever you use, okay? But a lot of us, again, we're just simply waiting on that, simply waiting. But we're not actually plugging into the actual true source, which is where Go Live is, okay? They're actually gonna explain that setup before they send it on the platform. So why don't you want to know the same way that this person is thinking? Right. So next time now you're on the chart, you can actually be thinking the same way as this 6-figure trader, this 7-figure trader, this 8-figure trader, and then there'll be no capping. There will be you doing your biz by yourself. Okay. So again, it's one of my challenges to you guys. You can go ahead and use. I do both. So I plug into the Go Live sessions as well as plugging into the services. I mean, it's best of both worlds. You've got to. But that is literally it. So guys, having said that, I'm sorry I did have to rush it, and I'm sorry again that we started a bit late. Zoom basically didn't want us to do bits, and then my Google Chrome crashed, so I had to use Microsoft whatever. But yeah, I hope I've added value to you guys. I hope that you guys can go ahead implement, even if it's one something, or a little something, or something new, or something that you guys have heard before but I may have said it in another way. I pray that you guys got some sort of breakthrough from this, and then yeah, just let me know how it goes. So as I said, guys, this is meant to be next Thursday. So as I said, guys, the key, this you guys want to go over the okay, you guys want to be going over the key takeaways that you guys wrote. We are, as I said, there's so much more to come. We've got the part 2, so this was a bit this was part 1. If you guys want to drop me a message, if you guys want to go more into it, hit me up on Instagram. I'm active on Instagram. That's my at there. That's my social name. So hit me up on Instagram, and then let me know how this call could have gone better. Number 1, number 2, what did you like best about it? And then what were some of your key takeaways or some of your breakthroughs that you've learned? I would 100% appreciate it. So having said that, guys, I thank you all for plugging in, number 1, and I hope that this will change your trading game, or at least be part of that changement that will change your trading game. And I'll see you on the other side, where we're not just normal forex traders, but we actually have that investor mindset where we're not just catching pips, but we're collecting percentages, and then we're growing our account, we're compounding it that way. So as I said, guys, having said that, thank you for plugging in. I will see you on the other side. Thank you.